Amazon is going to benefit from AI. They're already logistical geniuses, and AI is just going to make them more profitable.
Welcome to today's Stockcast with Andy Tanner. Today we're going to talk about something that's on everybody's mind, and that's AI. And I want to know why Andy Tanner tells me that he loves AI when it comes to stock investing. And that's pretty exciting to me because I love AI to use at work, but I don't get how I can these stocks. In fact, I'm afraid to even invest because there are so many. But before we get in there too deep and we get to hear Andy's wisdom, and I always forget this part, don't forget to write in the comments, leave us questions on what you'd like to learn. I'm assuming you want to learn about AI because that's pretty, badass. But also hit subscribe, hit the little bell thing so that you know when Andy makes a new video. And not legal, not financial advice.
Not advice. But we will do, but we'll always give you we won't give you financial advice, but we'll always give you a link to educate yourself. So that's a good plug. That was good timing, wasn't it? Slide that in there.
You just say great. And what Andy's talking about is it in the description. Every week, Andy's generous with us, but he's given us a free web training called Zero to Cash Flow. And I've probably gone through 6, 7 of your web trainings. This is my favorite. It really made me believe that anyone can do this, and I think that's pretty important, and it's empowering. So
I did that webinar for people that have just read the book Rich Dad Poor Dad and don't have any assets. Oh. And I love all the asset classes, all 4 of them. Real estate, business, stocks, commodities, paper, whatever. I have found for sure the fastest way to put an asset in your asset column that can provide cash flow is just go out and buy a stock that shares profits with their shareholders. The second way to get an asset is just go buy a silver coin, but that doesn't cash flow. So if you want to go from zero to cash flow, learn about how stocks work, and then if you want to supercharge that, you learn how an option works, and that is absolutely the fastest way to put money in your pocket, for sure. I mean, click, boom. So click, get paid. That's how it works.
Yeah. I was talking to Kim Kiyosaki because, we always say an asset puts money in your pocket, which gold and silver don't, not really. And so she said, there's really 2 kind of assets, one that your banker really loves and one that does put money in your pocket. And she said, while we tend to what puts money in your pocket, you also can't ignore gold and silver because it is such a good hedge. And
it's a protection. It is a protection. But if you want to use gold and silver, put money in your pocket, you can actually do that via paper. So I do it. I do it every single month without fail. I mean, for years and years, we have gold stocks. We get dividends from those gold stocks, and we write options on those gold stocks. So we use it both ways.
Yeah, I love that. It's like compound.
And you have to forgive my cough. I've got a little cough lingering that's tickling me this morning. So I'll do the best I can.
All right. Well, I think we can live with it because we can put up with that for a little bit of wisdom. We'll compromise here.
Okay. All right.
So, Andy, what we've promised today is that you're going to talk about why you love AI in the stock market. And I just kind of told you why I'm afraid of AI in the stock market because I don't know who to invest in. There's so many. And if it's anything like tech stocks, they all are amazing. They all are, and then only 3 or 4 end up surviving. So can you kind of explain that point of view?
Well, I don't know if it's what dimensional thinking this is. I can't imagine, I think it was Mr. Spock that coined the term 2 and 3 dimensional thinking, but, and I don't know that I have the brain power to think that way. A lot of people think my intelligence is artificial, that it isn't real. So couple of thoughts. First of all, I'm excited for AI for 2 or 3 reasons. I suppose the first dimension you'd look at is as a user of it. In stocks, we're always wanting to choose our investments based on data. And so we're going to, like, for example, and AI is kind of a misnomer because it just kind of covers any new technology that's cool, right? What is ChatGPT? It's a search engine that'll talk back to you. It's a lot of fun to argue with it. If you've got a little time to burn, and it's fun to see its flaws. It is so far from being self-aware, so far from being sentient. When I think of AI, I really think of a technological organism that is sentient, that is self-aware and can make decisions and moral judgments. And we are a zillion miles from that, in my opinion. Well, not a zillion miles. I mean, it'll happen someday, but it hasn't happened today. So when you speak about AI, artificial intelligence, that's become a buzzword for very, very cool technologies that can create things like art and music, and can go find data, and, it can make decisions, advanced algorithms, that are fantastic. So with that said, we have already been using, fairly advanced technology already in how we find candidates. So I guess the first thing that would excite me is, it's been said that our generation is the most, we should be the most successful, or at least the most informed generation in the history of capital markets. There's absolutely no question about it. It's been said that the ease of today's technology is not a reason for us to do less and be lazy. It's a reason for us to do more and achieve more, individuals and also collectively. So if a person wanted to be an entrepreneur or wanted to be an investor, this is just going to get easier and easier for anyone to hop in. So if you're a capitalist, the idea is pretty exciting. It's always an optimism, move forward idea. If you're a socialist, I don't know what you think. I don't know how those guys think, but if you're a capitalist, the idea that, someone like my sons, teenagers, will be able to use AI to start businesses and serve the world. So from a technological standpoint, if I want to find stocks and I want to be an investor, the ability to analyze fundamentals is going to get better, and it's going to get faster. And, I could really see in the future, instead of reporting your earnings once a quarter, why couldn't AI give you real-time data on whether there's not a big drum roll, please, and then all of a sudden they release earnings? Why couldn't you connect to a company in real time and just see exactly how they're doing? So that way, if you have something really rolling that's coming up and getting momentum, you could turn almost fundamental analysis, which is at a snail's pace every quarter, to make it more like technical analysis, which is done in microseconds already. So whether you're a fundamental investor, which I lean towards in stocks, or whether you're a technical trader, which I lean towards in options, I invest in stocks fundamentally, and I trade options technically. So both those pillars investing are going to get just nothing but better as you can analyze them. So I'd say that's the first dimension that I get excited as a user of the technology, to find opportunity or to see trouble faster than ever before. And of course, it levels the playing field. I mean, it's not like one guy is going to have a leg up, but if you're not using it, you're probably falling behind. So that'd be the first thing. As a user, we're already using incredible search tools, incredible data crunching. You can come up with a criteria that you like. Mine are very basic. Mine are very much, as far as fundamental investing, like William O'Neill. Is it growing? Is it earning money? If a company's growing and earning money, I think those are the two biggest components. You can find all kinds of metrics. You can go, EBITDA or EV over EBITDA or whatever you want to do metric-wise to get to those numbers. But the AI is going to be sweet that way for sure.
I love your other criteria, which I'd never thought of before, and that was, you told me, if a company will be around in 50 years. That's one of your just side questions on
that's
stock.
That's really not me. That's Warren Buffett. He calls that a moat, where you've got a big defense. You're not going to take that castle down very easily. And, he talks about this in terms, I think it was way back in the 90s that he was talking about diversification at one of his conferences. And the question came up a couple times, and he said, look, if you want to manage risk, find companies that are resilient and hard to take down. Rather than diversifying throughout the whole market, they feel that the resiliency of like a Coca-Cola, it's going to be around. It's just going to be around for a long, long time. They're so big. There's not a lot of innovation going on in the cola world, and people like the taste, like the tradition. I feel very confident my grandkids are going to have a Coke and a smile. I don't like Coca-Cola, but I'll have Sprite once in a while, I guess. But I do own I own shares of Coke, and I'll bequeath those to my posterity, and they'll enjoy the dividends and be glad that great grandpa Andy bought it when it was cheap.
Right. So, all right, getting back to AI, how are you picking your AI stocks?
Well, there's another dimension of thinking, and this kind of goes back to something I learned when I was something I heard. I think I was probably in high school or very early in college, back when we had VCRs. And everyone in my little ignorant circle, we were just kids. They were all talking about how the Japanese are going to overtake America because they make all the VCRs. They make the camcorders. They make the electronics. And if you had it was all coming from the East, China and Japan. You had a Sony VCR, you had a Mitsubishi VCR. No one really had not very many people had American-made video cassette recorders, which are, of course, obsolete now. But someone said it's interesting because they said, yeah, but all the movies are made in Hollywood. And so you can't really use a VCR, and for every one VCR, there's 10,000 movies you got to buy to go through that thing, and the money. And I thought about that, and I thought, okay, it's kind of interesting. I feel the same way about AI. I think you're very well positioned if you own Apple. It's a lot like Bitcoin. If people want to trade Bitcoin, they're going to do it either on one of my Apple phones that I have for sale, or one of my MacBooks that I have for sale, or Mac Pro that I have for sale as a shareholder. And I also own a company called Verizon and AT&T. Rare that I'd pick more than one, but I like the price that AT&T was cheap, and I love the dividend of Verizon. And so, I'm pretty. That's a big chunk. I don't have any T-Mobile, but if you want to trade Bitcoin or use AI, either one, you got to have something to trade it on. So it isn't, it's kind of that same thought about VCRs and movies, that while I might not find the company that blows it up, if I have a utility, like right now, if you're going to get stocks in a utility company, use electricity, our dependence on that energy and our moving towards dependence on that energy, is huge, whether it be clean or dirty or coal or solar. You're going to have electricity to run AI, and you're going to have a computer to run AI. Amazon is going to benefit from AI. They're already logistical geniuses, and AI is just going to make them more profitable. They've got so much money to invest in it and use it before other people. I think that's probably Warren Buffett's take on it, would be to look at a company like Amazon and say, which companies will AI really benefit the most? And it's darn near everyone. So the internet lifted all the boats. There were a few boats that sunk. If you were a travel agent in 1980, you may not be a travel agent anymore in 2020.
Right.
There's still a few really good ones for high-end, travelers that want their own personal concierge as a travel, but most of us get on delta.com, buy your ticket anymore. So there were a few jobs lost, but our ability to buy stuff, the lubrication, the less friction in being able to purchase things, technology makes that better. And AI is going to do nothing but increase bottom lines. So across the board, AI is going to help existing businesses do better. So you don't need necessarily to benefit from a big surge. Like, you look at where we were, the levels of the market. We had ups and downs. We had the big NASDAQ crash, of course. But if you look at where we were in the markets in the 90s, going into the year 2000, the tech bubble, after it burst, the FANG trade came out, meaning, the Facebook, the Apple, the Netflix, and the Google. And there'll be another FANG trade. We don't know what it'll be yet. There'll be another where you have the core AI stuff, but all the boats are going to rise. And one of the things that's keeping the market steady, I think, through this is people know it. And even though I'm a bear on so many levels, Greg. I mean, I look at what the Fed prints money. I look at the fiscal irresponsibility. And if you'd have told me that we were, bumping our head against all-time highs in the midst of rates that are higher than they've ever been, I'd never would have believed you. And so if you ask me, why is that? That seems impossible. I think it's because people know, or believe anyway, that AI is just going to make businesses more money. And when you make businesses more money, those businesses become more valuable. If you get away from the detachment, you really look at what businesses do, which is serve people, that's what makes a business valuable. It's not what people on Wall Street think. It's whether they're serving people, and AI will enable them to do that better. So I guess that's another take on it, is the stuff I already own is just going to do better with that technology.
So, Andy, we're going to head to break. One of these days I'll learn how to talk. Oh, and then I want to ask you, Robert Kiyosaki and I were talking about AI just yesterday, and I want to get your thoughts on what he said, because it really does play into what you just mentioned, the Fed. And so I want to hear your thoughts on, well, I want to tell you Robert Kiyosaki's thoughts right when we get back.
Sounds good.
All right, everyone. Thank you for coming back to the Rich Dad Stockcast with Andy Tanner. And before we get too far, again, put comments in the comment section, whatever, how you say that. I do want to tell you, Andy, I think in Star Trek, it was called three-dimensional chess. But if anybody knows the actual name of that, please put that.
I do. I don't want to admit I'm this big of a nerd, dude. It's Star Trek II, The Wrath of Khan, where they're going back and forth, and Spock says his pattern represents two-dimensional thinking, and that's where that's so bad. That's frightening. Okay, I'm nerd. That's nerding out bad, man. I would never. I hope my kids don't see that. I'm already a nerd.
I'm going to buy you one of those tiny statues.
We got our producer Sarah just put it in the chat. Huge nerds, man. That's so bad. It's embarrassing. I should never have confessed that, but you have to tell the truth.
All right, let's go into something.
Let's talk about Robert and AI. And oh, by the way, let me plug our free thing again. If a person isn't, you don't have to be in stocks. One of the nice things about real estate is that it's a physical thing that everyone's it's like medicine, food, clothing, medicine, shelter, right? That's it. And so shelter is always going to be there, and they're not making more land. There's no amount of AI that's going to create more land. We might use it more efficiently because of AI, but if you own a parcel, I had a friend of mine had a really nice windfall. He just took a chance, bought some raw land, changed the zoning, and it was a nice windfall for him. So I don't decry other asset classes. I will say that if you want exposure to AI and you want to go zero to cash flow, learn how to own companies, learn how to own businesses. That's what real estate really is. If you're a cash flow guy, anyway, you have an LLC and you offer a product and they pay you for that product and you enjoy profits. And that's the potential for a company to go global, the potential for a company to go huge. There's always going to be a bit of a stabilization in certain asset classes. Gold is going to be gold, right? For everybody. You ain't going to have your gold that goes big. But in business, you think of the alchemy that's there, going zero to cash flow. You think about Bill Gates, who got some ones and zeros that were more popular than this guy's ones and zeros. And they don't even have anything but electronic ones and zeros. I mean, talk about a profit margin that you can just duplicate and replicate. No wonder the guy became, the mastermind zillionaire that's going to take over the world, right? So just understanding the massive potential of not just only going zero to cash flow, but really learning how to expose yourself to the upside of things that have made so many millionaires. The greatest investor of all time, I think, Warren Buffett, I don't know that he's ever even started a company. He bought Berkshire Hathaway and leveraged the guys out of it because they screwed him, and he got pissed and bought their company and fired him. And that became the holding company for all the other stuff he's bought. So he didn't start Dairy Queen, he just bought it. He didn't start Duracell, he just bought it. He didn't start See's Candies, he just bought them. And buying businesses is a great way to get exposure to this stuff. So I would absolutely, if you've never owned a stock and written a call, that experience is exhilarating. To have a new person that reads Rich Dad Poor Dad, has nothing in their asset column to speak of, or a crappy 401k or whatever, and you show them how to click that mouse and that cash gets delivered instantly. And at that point, whether the stock goes up, down, or sideways, doesn't matter because you have the cash already. It's what's more exhilarating than taking a step forward towards out of the rat race and doing something. So I would really encourage people to do things. It's wonderful. I think podcasts are a gateway drug to serious financial education because they're easy to listen to and you get ideas. When you start to do exercises and you start to actually practice in a paper trade account, that's when that stuff goes next level. So if you're going to benefit from AI and you want to be inside that wave, if you're not a computer nerd that can create your own code, you want to be more like Warren Buffett that buys the guy that creates the code, chances are you're going to get rich in the paper asset class more than the commodity asset class. However, AI, they're going to drill better and find stuff better, and it's going to help it. But I really think if you're listening to this, you say, I got more wealthy because of AI, probably because of a paper asset that you bought.
Well, I'm going to add a little bit to that, and this is probably going to upset you. So my son and I we're starting to do option trading, and so I showed him some of the things you taught me, originally from this course.
Yeah.
And, so we bought a stock, and then we bought the options. It took 15 minutes, right? Because I'm as lazy as they come, and and my son's like, okay, Dad, so we'll do this again tomorrow. And I was like, no, we're going to do this next week. Take a week off. We'll do 15 minutes next Monday. No,
that's pretty good
for you to hear, but that's one of the things I love about it is I know I'm not supposed to say this, but it's almost set it and forget it.
You have to kind of watch it a little bit, but most of I was doing analysis for a presentation I have to give, and I took a really good example of a company I bought about 4 years ago, and I just went through the option trading and the high probabilities of this stuff. It's like 86% of the time you don't have to do anything, and the other 15, 16%, 14%, you gotta make a little adjustment once in a while. But with option trading, you can create probabilities to where the success is between 80 and 90% with still preserving some pretty decent reward. Risk certainly goes up with the options game. There's no question. If a person doesn't know what they're doing, that 13, 14% where they don't get it right and they don't know how to adjust, it'll kick them in the face. But if you know how to handle that, it can be a pretty lazy.
Seriously.
Maybe that's what maybe you just discovered why I like it. I don't know. It's just a very lazy thing, but
that's one of
it's great. So
yeah.
But I'm curious. So take the zero to cash flow course. I'm curious though what's been wrong. I didn't. What do you say?
Take on AA. So whenever you talk to Robert right now, everything's about the Fed and inflation, and even though they're not doing it this moment, they're going to print more money. I shouldn't say they're not, but they're going to get back to really mass amounts of money.
Yes, they are.
And he was saying what he likes about AI, or what he sees about AI, is it's a huge deflationary move, and it will help mitigate the inflation, and possibly for bad reasons. but because you'll do things faster, cheaper, and also you'll probably, at least initially, use less employees, which you
Yes.
touched on when you were talking about fundamentals. But that's really where Robert keyed in that,
Yeah,
hey, it's not.
I agree. Actually,
You do agree to that. Okay.
it's incredibly deflationary, and yet it's expansive at the same time. So, what do we mean by deflationary? Well, all technology is deflationary. For example, if I take my Apple phone, okay, and I write down everything this does. So it's got GPS in it. It's got a video camera in it. It's got a photographer. It's got a still camera in it. It's a phone. I guess we should mention that in a
A
phone.
little bit. Maybe.
And it does, if you just take everything that it does, right, it can charge another phone now. So it's a phone charger, right? So if you went and you purchased all of those things in, let's say, 1980 that could do this wirelessly, it would cost you who knows how many tens of thousands of dollars, right? And so what technology does is it's a lot like ephemeralization, in that, a Buckminster Fuller term is it allows you the leverage to do more with less. And that is really the definition of deflation. You're getting more with less money. In other words, you're getting your dollar is stronger because it'll buy you more when you spend it.
Right.
And so literally technology has always been deflationary. So if you bring in a level of technology like AI that is just really next level stuff, it's going to be tremendously deflationary. You're going to get more for your money. You're going to do more with less. And so even though your dollar is worth less, because you're able to do more with it, that dollar goes further and that strengthens it. Even though the printing weakens it, the fact you can do more with less strengthens it. So I'd have to agree with Robert totally on that, because that's not something that we have not seen in the past, right? That's a very well-known pattern, and we could have example after example. Our cars are better. Our dishwashers do more with less, right? Our washing machines do our laundry, do more for less. And things are cheaper. Stocks. You used to, when I first started trading, it was $30 a trade. Cost you $30 to make a basic trade. Now it costs nothing. The competition and the technology is driven. You get more with less. So it is so interesting that what it does that's scary is it rolls the snowball up the hill. It doesn't kick the can down the road. It rolls the snowball up the hill. What that means is the potential energy of a crash gets bigger as the snowball compacts and gets bigger. And as you roll it up the hill, it gets higher. So you have something more massive, higher up, which means a bigger meltdown. Every time I think, people say we're kicking the can down the road. No, we're rolling a snowball up the hill, and it's freaking massive. And AI will continue to pack mass into that, and it's going to be really, really fun. And I can't wait. I love crashes because a consumer can't wait for Black Friday. An investor can't wait for the Black Swan, because in both instances, the thing that you really want get cheap really, really fast. So consumers get excited when, doodads drop in price. Investors truly get excited when stocks drop in price. But right now, I think AI has been breathing new life in this market. I think it's going to struggle still for a bit, but it's going to hold it. It's holding it from disintegrating, right? There's a detachment from fundamentals still, even though there's been some nice earnings reports, even though we've had the hardest thing to explain is the high rate and the growth of a market in a high rate environment. It's not something we've seen very often. And a lot of people, me included, think that AI has helped the speculation of where it's going to go. You don't want to pull out because it's probably going to get better before it gets worse.
Right. So going back to your fundamental investing comment, would you, and it might be too early to say this, but let's just imagine that Amazon, one of the leaders in AI, is the same price as Coca-Cola. And let's even say their dividends are the same, all right?
Yeah.
Would you then, in in your when you're analyzing both, would you take into account that AI is going to help in the future Amazon more than it's going to help Coca-Cola? Would that even factor into your decision making?
Well, that's an interesting question. I would say that, I don't think I know the answer to that. I don't want to answer out of ignorance because I'd just be guessing. So let's label that as a guess. AI will help every company, especially in terms of logistics. So depending on, you'd have to go in and look at like Robert talked about, labor being removed, right?
Mm-hmm. Yep.
To what degree does it remove labor based on the processes of both those companies, and how different are they? Which one is already automated tremendously? You'd have to actually run numbers on that. I would lean towards Amazon simply because of all the logistical stuff they do. Coke is gone through retail channels. Amazon is going, straight to customers. So I'd imagine their logistics are much more complex. It would probably help Amazon more, but you may never know. They might already be very, very efficient, and Coke might just find, a lot better efficiencies depending on their model. So I don't know. I'd have to see numbers, and it'd be interesting to get a presentation from both of those companies and their comptrollers, or the controller, the lead accountant at the firm, to say which one would benefit more by those levels of efficiencies. But
Right.
well, the one thing I do know is as I look at what I own now, there are 0 companies I own now that will not benefit by greater efficiencies. I mean, it's just how it is. And so it'll settle. We've got about a minute to go, they say. So I'll just say this. There's this thing called the FANG trade that came out of the internet boom. Companies like Netflix and companies like Google and companies like Facebook and, Apple, companies like Amazon. There'll be a FANG trade out of AI, and we'll find what those companies are. And it'd be nice to be there before they explode, but if you identify them fairly early, you'll be okay. So there you go.
Gotcha.
So go get zero to cash flow.
I was just going to say, when somebody gives you a gift, you take the gift. And Andy is giving you a gift. It's a free web training. So if you don't take that, I guess I'm confused on what's wrong with you.
What do you...
Like, what's going on? So yeah, I do want to end with really look at Andy's free gift for you. Click on that, see if it's right for you. And I also think, and then I'll shut up, Andy. I think by taking that web training, this podcast, this YouTube will make a lot more sense also.
Absolutely. No, they go hand in hand. More is always better when it comes to learning. Who wants to be dumber? Nobody.
Right. Not at all. Andy, once again, thank you, and we'll see you next week.
So good. Make comments and tell us what you'd like to hear in terms of topics, too, because we do read them. So take care, everyone.
Goodbye.
This podcast is a presentation of Rich Dad Media Network.